to get back into it. I might get a call out even further. Like I did that. I'm like, wait, I don't have any in December 28th. Let's see if it depreciates even more. Like it was 40%. Today, I was on a plane. I didn't get to see it. Probably those same contracts are probably down 50%. I'm looking to get out into 2028. I'm 2 years out. All right. Yeah. Is this still the company I believe in? Is the story changed? No. Right. I don't care if SK Hynix becomes publicly traded here in the United States. I understand the story. Even with Google making the announcement about Google Quant and how that might change memory. Well, if you look at the history of Google, a lot of their products are used for internal employees.
Yeah. Right? It's not for the end consumer or most enterprise.
To get ahead. It's not enterprise facing, hey, we're making these products so you can buy them. It's, hey, we're using them so we can get ahead and stay ahead. So the story doesn't change. The companies haven't changed. The opportunities and the prices and points that we get them, that will change, but we got to make sure we're on the right side of it.
So what's the recommended stop loss?
I would say safety is probably anywhere between 20 to 30%.
25%.
Now, they've watched me do further. What companies am I going further on? NVIDIA, right? Well, I go 50%. Of course, I'm going to go 50% on NVIDIA. Micron, I've done 50% and they've seen it before where I've gone 50%. If it's a company I understand the story and I clearly see it, yeah, I set it a little further out.
And this ain't the time for that's 2 times trading. No stop loss. No, we're not in that market. Like, chill if it's not an excellent company for my futures traders, because some of you are taking your stops off and you're trying to ride it through the London through American session, but things can change so fast. Make sure that you have your trades in place. And for my futures traders, record your trades. Because if you get stopped out, you can't tell them, hey, my stop was at this level and you filled me here. You're going to have to send in evidence so that they can verify it. And on top of that, credit it back to your account. Because even the slippage in your stop loss may be deeper than you want it to be because of the volatility. Be mindful.
Yeah, it's important. And that's why I said nobody celebrates on the negative side. It's like, oh my gosh, the sky's falling.
Yep.
Well, the same Micron call that was down 52%, when I posted that it was up 2,000%, everybody cheers.
Yeah.
Why? Right? It's because it was the discipline, the vision was there. We understood the story. We're there. A lot of people, and shout out to everybody that made gains on that. It's because of the discipline. It's because we bought time for that to have a reversal, right? We can't predict volatility, but what we can do is buy time to combat it.
Really quick to do an evaluation assessment. On Microsoft, the stock price was $350 3 years ago. The revenue was $211. Net income was $72. Now the revenue is $305. Net income is $115 billion. But it's at the same price that it was 3 years ago. So if you're asking me if the stock is undervalued, once again, right now, the net income is at $115 billion. 3 years ago, it was at 72. It's at the same price from 3 years ago. Is that undervalued? Yes, absolutely. I know some of you are saying that Microsoft is a failing business. I wouldn't go that far. Do they have some adjustments to make? But it's kind of hard to call a company that's netting $115 billion a failing company. There will be no easy wins in the market until this war is over. That's why I say it's a baby black swan, because it was unforeseen. And when you have a person or a team that doesn't give you an easy resolution of how to get out of this war, people are going to keep their money on the sidelines until there's a sign of safety.
Somebody said the stop loss is 98%.
Well, if you had Fart Coin or Melania Coin, you're fucked, my boy. Sorry.
Hit the like button and share. Shout out to my niece. Blessing on the check-in.
Blessings.
What a blessing.
And love.
That's a fact. Oil is over 100.
Yes, it is. I see that 105 right now.
Mm-hmm.
Oh boy.
Talk about it.
It's been an interesting season. I'm keeping my eyes on it. Do I think we will eventually pull back? Yes. But until there is a ceasefire or an agreement to leave the space, there isn't a reason for oil to come down. And the other part is, I don't think I'll touch on enough, and that's my fault. This is the real sector rotation. When we're in recession, remember in 2008, so Rashad, he was driving through New York, gas was probably $4.15. Because I remember in Indiana at the time, it was probably $3.89, and that was almost like hell on earth. The rotation for investors that really matters is the tech to energy rotation. It's not the 60-40 bond. So normally when all hell is breaking loose and we are filling it in our pockets, in our 401ks, and our pensions, the oil market has taken off to the upside. Like Exxon has been a stock pick and stock club forever, but you've talked endlessly about the number of energy companies that have went off, right? They kind of masked it as a data center move, but it was a hedge for what was to come. If you look at all the shares that have been sold off in the tech side for the last 5 or 6 months, they were just saying, oh, we're building data centers, so now we're invested in energy. No, they was investing in energy as a hedge to what's to happen. So if you are looking for a rotation move for sure, in a recession, look to invest in energy and oil, and then you'll have a retreat once the market settles out. Then you can go back heavy into tech. But the other rotations in the consumer staples and yada, yada, they don't matter as much. It's really a battle of tech versus energy always.
Yeah, and they don't move as much for consumer staples. Yeah, no. I think that's what we're seeing right here. It's very clear when you talk about the Mag 7. And just think about it. We talked about NVIDIA in terms of how it's equally weighted on the S&P, like the company. And it was about 7% of the S&P.
Yep.
Right. So imagine what the Mag 7 means to the S&P. To have all those nearly at 20% negative, and we're just at correction for the S&P.
Yep. It's interesting. And there's other companies that are down 40, 50%. But if you look, the XLE's at plus 41, the financials are negative 12. That's really interesting, that gap. But if you go back to 2008 and the 80s and the 70s as well, you'll always see that these oil companies have went up during times of recession. And that's why if you're looking for certain levers, we can't have oil stay above a certain level for a long period of time because it's going to affect us all. So, Rashad, what can you do? All you can do is pray that they decide to come to an end and someone decides to not have an ego. But my thing is, we're going to have a rotation of endless wars. Palantir, who you thought would have probably benefited from this, they're down 34%. That's fascinating to see that even they are getting beat up by a sector that potentially would benefit them. So,
yeah, and I think you got to prepare yourself. You know, this year at InvestFest, we're going to make a strong emphasis of, like, there's going to be a panel on people that work a 9 to 5 and are entrepreneurs at the same time, and how to transition from an entrepreneur to a 9 to 5 while still, that's important. Thinking about potentially doing something on trades. That's important.
That's a good one.
You know, like it's time. Like, I think it's really, really, really a pivotal moment in time right now. And a lot of decisions have to be made as far as like where you're going with your life. Because this only thing that this war did is just accelerate. We could talk about the wealth gap. But only thing that these geopolitical events do is just separate and further make the wealth gap, for the racial wealth gap, but just the wealth gap in general between the ultra rich and everybody else who's struggling. And that's what we're seeing with this war. Like, you know, when gas prices, these recessions only hurt poor people.
Yeah,
recessions hurt poor people. Because rich people, they have opportunities to invest in during recessions. They have opportunities to start new businesses. It's the poor people that get hurt. So that's why, like I said, this year for InvestFest, that's a major point of emphasis, is really catering to that audience of people that's really trying to just figure it out before it's too late.
And if you think it's only middle class and poor people that are suffering, it's not. The values of portfolios are changing daily. Even if you look at OpenAI has lost 25% of their market share in the last year. No one's talking about like the battle of OpenAI being the new Apple maybe, and Anthropic being the Microsoft. There's a budding war there as well. They shut down Sora after 180 days. Like, even the greatest companies on earth, whether they're pre-IPO or post-IPO, they're making cuts to staff at an aggressive level because they know what happened. And it takes me back to what Magic kept saying. You only have a couple years. Like, he emphasized that so much. I go back to Jack. It was a few people who kept saying, yo, you got your affairs in order? Buckle up. This next ride gonna be a tough one. These are people who have enough money to last them 96 years. LeBron's still playing. That scares me. I'm not gonna lie. Bronny and Bron being on the court, I'm like, that is a magical moment. Same thing. Okay, now Jay got the concert. Kanye announced he got a concert at the same time as Jay. Kanye money stretched pretty far. These are recession indicators. And even when we're getting 600, 700, 1,000% return in the market, I told you it was because it's to offset the losses that are going to happen in 2027. Now you're going to have to average them out for 3 or 4 years. Troy and Rashad going all around. They got an interview with Angie. They're sitting down with Mayor Greenberg. They did with the Poppy Steak, Erner. I went on 7 interviews last week. It is go time. I'm sending out thank yous and apologies. My brother, can we make up? Now's not the time for war. When we in war, no. I need all them votes come next year. No. So lock in. In.
The open AI thing is, I'm glad you brought that up. Not only are they raising more money, but I think and this is an interesting cycle. I think this is the cycle that we're in right now. AI, specifically in tech, we saw the sensational stage, right? Like, this is the next technology that's going to lead us. This is going to be great. Who are the companies that are going to lead it? And then we saw those companies, and it's very clear. I think those companies will still be the prevalent leaders in it, but I think I guess the cycle now is more of phase 2. So like if we were in the first 2 innings, like everybody was saying, I feel like now we're getting into the 3rd or 4th inning where now it's efficiency and it's monetization. And so when you see Sora get cut, okay, we're not monetizing off this enough. I don't even if we had the $1 billion from Disney, like they're looking at it like, I'm not sure this is going to be something that's going to be able to bring back an ROI for us.
Finally.
It's costing us to do it.
Yeah, it costs us too much
energy. Look, let's stop. It's costing us the GPUs to do it. Let's just stop it now. So it was kind of surprising. And then you look at it and you say to yourself, what are they really doing? Well, they're really saying, we need to figure out, because everyone is doing it, right? We talked about Meta, talking about Microsoft. How can we monetize as fast as possible, right? And how can we be more efficient? So the efficiency comes at the cost of people getting laid off. We saw Meta announce more layoffs, Amazon, more layoffs. How can we become more efficient? How can we monetize on this spend? So when you talk CapEx, right, you better start talking how are we going to make money when we spend.
Absolutely. Now's not the time just to be a reckless spender and just running up a $9 billion bill. And also, and even with this, the private credit default thing, which hit an all-time high of 9.2%, they're allowed to not have those losses on their balance sheet. It's sitting on the balance sheet of the banks. If I did that, Rashad, and they interviewed you about it, you'd be like, yo, bro, I love you, but had a good run. And in a traditional sense, write this in chat, that would be called a Ponzi scheme. I can't have a $500 million loss and then offload it to MG's balance sheet.
Yeah.
And tell you, outstanding quarter, 32% growth year over year. What about the $500 million debt that you have? We have a reimagining of what reporting looks like.
The reimagining. I think that's why it's important. And when you talk about doing the research and really understanding these companies, look at the companies that are saying that they're spending and where they're getting the capital to spend. Because some of them are borrowing and some are saying, hey,
we're going to use our own profit.
We generate so much
money. We need to borrow. That's my blueprint. I love that. Okay, I'm going to use my own profit and reinvest. Brilliant.
So, right, like the companies that do that, I mean, obviously the Metas of the world.
Yep.
Those companies are using profit, right? When we talk about having high profit margin, that's why this comes into it, right? When we talk about operating cash flow, when you have 100 billion, that's why this comes into play. So the CapEx is a little different. OpenAI, obviously, and this is why this is the next phase. What is the monetization? So we can have the revenue. They got killed for trying to do the ads. They said, look, let's be more efficient. We're not going to do Sora. They're going to have to figure this out very soon.
Yeah, in order to have the next phase, you have to kill off something. Speaking of which, Oracle's 5-year credit default swaps are up to 191 basis points, the highest level since 2008. You need one of these giants to die. I've never in my life heard crude futures and credit default swaps talked about this much since 2008.
It's a lot. Does Oracle worry you?
To me, it was 2 signs that the show was over. Brad Gerstner, when he asked Sam about how his plan to get the money back, 1.
Sam,
and then Oracle was number 2. When people start saying Oracle was going to get this great return, and privately, Larry's got the return, but the company in shambles. For those you don't know, the company hit a high of 340, 572. It's currently at 138. An absolute free fall. There are more people trading the downfall of the stock that are willing to buy it. That reminds me of Research in Motion that own BlackBerry. This reminds me a lot of AT&T back in the day before they got bought out. This reminds me a lot of that Bill Ackman on CNBC Herbalife fight. That when you have credit default swaps this high on a company this big, it's never good. It is never good.
Yeah, it's just like an interesting story with them because outside of the OpenAI piece,
it was uninvestable.
Right. Well, they started to switch it, right? Like the cloud business is still making money. So like there is revenue that's being brought into Oracle, but the CapEx spend and the commitment of potential further CapEx spend with OpenAI has led to those credit default swaps being so high. But they were generating revenue and they are seeing an increase in the cloud service. It's interesting time for them.
For sure.
For sure. All right. Next time, we'll get your tickets to InvestFest, investfest.com. Yes. And I will say this, if this is any indicator, the host hotel is sold out for the weekend.
Really?
Yeah, if that's any indicator.
That's telling.
To let you guys know. It's a recession indicator as far as you gotta really, really, really get serious about your finances. So the host hotel is sold out. So please don't wait. Please don't wait. S&P 500, how low will it go?
It really depends on the time. And put yes in chat if I told you the Microsoft price, where we could go. I think if we come to a resolution in the war, I think we could see a bottom around maybe 63.24. If we don't see a resolution in the war, and I want to be responsible with my voice because our platform is too important to alarm everyone out there, I do think we can see a place where we slide back into the 5,900 level, like 5,945. So for me, a great exercise. Act as a world-class investor. If the Iran conflict continues for 225 days, what is the estimated price that the S&P 500 will go to? Because the decay, so you have time decay, an options market, and a futures market, right? The part that people don't factor in when you have like these beige swans is how much are they drawing down the market each day? If we're seeing a 1% to 2% drop each day and there's no buying signals or no positive news, think about it. As much as Jensen talked to GTC, he made press rounds. It didn't move the stock. So I'm not saying it to be an alarmist, but from an investment standpoint, you have to know what those load the boat levels are. I pray that we don't go there. So if the war lasts for 200 days, I do see a level where we can probably hit 59.60, 59.40, somewhere in that area. And for that reason, if the S&P stays that low, crude at that point should be at 131 or 130.
I was going to say 145 plus, yeah.
Yeah, and then at that point, the VIX should be at 34.18. And if we're at all of those, like if crude is there and VIX is at 34.18, the S&P has no reason to go up. But once again, it is a generational buying opportunity. Even though there's a lot of blood in the street as an investor, this is the playoffs. I love it. I feel like the kid who hit the shot on Duke. It's like, I'm just waiting for the right opportunities, but you have to be a sniper. You can't throw all your capital to everything. Now you have to lean back more, like you said, on the indexes and the ETFs. But if this war is not resolved anytime soon, but we can get to the 5,900s.
59. That's 300 basis points below the 400 day.
If we stay in war, not if he resolves the conflict and he says, "I'm sorry, fake news, bad idea," but I don't know if his ego will let him say that.
Yeah, I don't think so. I mean, that's on the low end. We have price targets for the S&P for the end of the year. Is the 7,000 range still something that is feasible at this point?
It depends on if they get this AI circular investment thing wrapped up and how quickly they end the war. Let's just talk like it's you and I.
Yeah.
The longer we stay in this war, the greater probability we have a recession. I don't know if he cares about anybody other than his immediate family. Maybe he doesn't give a fuck. And he's just like, let me get all the money I can while I'm here because I know after this, no one's going to want to do business with me. If he cares about the party, he's going to have to find a way to get them out of recession. Like, I can't go into New York and cause so much chaos, you getting a call about me. Right? Yeah. But he's damn near the financial Unabomber by having all of these wars he's being talked into. So it's really dependent upon the war. And my second concern after that, after the war is over, will the cracks begin to show in our financial system, particularly around AI? How do you think Sam Altman went from being a genius tech darling to now he kind of got pushed out the cool kids table and now you want to lift up Anthropic? And for all of you who keep asking me about VCX, not yet. I keep telling you, anything is new. Wait 90 days. I know they promised you exposure to Anthropic, which you could have got through Amazon. I get it. But it went from 575 now to 111. It's too new. But think about this. A venture fund that went publicly traded with the best startups in the country, and it went from 575 to 111. That's not solely because of the lockup period.
Yeah.
That shit's scary. But stay disciplined. And you deserve to be rich. You deserve to be wealthy. Just listen the first time. And I got you. Back to you, Troy Rashad.
How would you invest $50,000 currently? Because somebody had a question earlier about $100,000. But if you had $50,000 today, why would you invest?
I would go incredibly conservative. I would do, of course, 2 indexes. I would do 50 and 50. 25 and 25 into those. And then after that, like hypothetically, if I can get Microsoft for the tech component, and this is like your last 100, right? Like if Microsoft goes to like 323.85, I would be elated to buy some there. But in times of, and I've never said this before, in times of crisis, I wouldn't be mad if you went all 4 ETFs.
Yeah, that was going to be my answer.
I would not be mad. I would do 1 healthcare related, 1 energy related, VOO and VTI. I think VHT is Vanguard's health related ETF, and then energy one together until the tomorrow. Does this mean change to 2x? No. But if this is your last 100 and the market that we're in, I would be incredibly safe until the war is over. Put it in chat. Until the war is over, I have to be ultra conservative. Oh my God, he changed the formula. I knew it. I knew it was a ruse this whole time. No. But be conservative.
That was the exact answer I had. It was like 12.5, 12.5, 12.5. 4 ETFs.
Yeah.
Still believe in the semiconductors, so SMH is one of them. Alternative, the second one could be technology specific. It could be XLK. It could be QQQ. Mm-hmm. I think you can't go wrong there. Overall index, right? VTI. And then the fourth one, based on what we're looking at in terms of a glaring need, I think energy is obviously the one, right? Like none of this works without energy, right? So, and you can, I would, you know what? I'll give 2 there. I'll give XLU, right? Because the utilities are important. So we'll see a lot of the companies inside of the XLU ETF in terms of energy are in there as well. So I'll have exposure to either or. I don't think you could go wrong. So that's 5. So if you got a 5-legged table, good luck. But those are solid ones. When things are uncertain, go conservative, grab your ETFs, just chill.
Speaking of being conservative, financial
and buy time.
Yeah, buy time. Financial conspirator, I love you, my brother, from the bottom of my heart. But 50% MicroStrategy, 50% Bitcoin. The MicroStrategy equation we have to change. Just a little bit. I love you. Shout out to Michael Saylor. I keep saying he gave a sign. He had a picture of him with a buoy and a Titanic in the back. Made AI. He gave you a heads up. So shout out to my guy Conspiracy, a loyal follower of Michael Saylor and a good analyst. So yeah.
Michael Saylor. He put the laser glasses up. They said that's a Bitcoin drop indicator.
Yeah.
So let's talk about the wealth gap.
You should.
The top 10% of Americans own 70% of the wealth currently. Bottom 50% own 2 to 3% of the wealth. And we know that white households have a 74% home ownership rate when black households have a 45% home ownership rate. We know that the average white net worth is around $100,000 or so. Blacks is like 14,000. So there's a lot of disparity, let's say. There's a lot of disparity.
Mm-hmm.
Is it going to get worse?
I'll go to you guys first because I have a gloomy take about this and I don't want to bring down the energy of the show. So I'll let Troy Rashad go first. You hear it in my voice already.
Want to take it?
What is it going to get worse?
Yeah. So do you think it's going to get worse?
Yeah. It's going to get worse. It's going to get worse for everybody, but especially for people at the bottom level because the value of the dollar is going down dramatically, and jobs, not only are they not paying more money, but they're losing. If you looked at the report that I believe Claude, one of these put out as far as the AI feels that it's going to take, and it just showed like it's just a small percentage of what they assume that the jobs will be taken over the next 20 years.
Yeah,
we haven't even scratched the surface yet, especially white collars. Once again, that's why everybody's talking about these trades. That's why the trade thing is like, look, all right, look, can't beat them, join them. There's going to be some trade things at InvestFest because, hey, why not? I'm tired of going against that wave. So, hey, it's not a bad
option. You got to go with the trend.
You can't. Yeah,
everybody can't do the same thing.
You can't. It's called you can't beat them, join them. I will say this. I did some research on this. Electricians is the hardest thing to do. It's also why they potentially make the most money. But electrician is kind of hard. Like you got to go to the program. You got to be an apprentice for 4 years. You got to pass several tests. Then next on that list is plumbers. Ian has
kicked Ian out.
We lost Ian.
Keep going.
Next on that list is plumbers.
Yeah,
which is also pretty difficult. I did research on it
and necessary.
They're all necessary.
Yeah, 100%.
But and nothing is easy in this world.
No.
But the easiest out of the trades to get in, do you know?
I mean, there's so many trades. HVAC. Okay.
HVAC is a relatively easiest trade that you can actually get up and running. So that was interesting. And the HVAC is obviously needed, and they do a variety of different things. They cover a wide range of house needs and commercial building needs as well. HVAC.
Something we can attest to.
For sure. For sure.
Definitely need it, man.
You need the HVAC.
You need your HVAC, you need your electrician, and you need your plumber. Vitally important.
For sure.
HVAC make the world go round. But yeah, construction, that's kind of a little difficult to get into as well, like on the highest level. So, all right. Long story short, yes, all signs are pointing to the wealth shifting even more. We're about to have the largest wealth transfer in history. When we talk about baby boomers passing down 401ks, passing down IRAs, passing down pension plans, passing down homes. We're about to see trillions of dollars being transferred over the next 20 years, the largest wealth transfer in American history. Sad part about it, and life insurance, I forgot to mention that. The sad part about it is that a lot of people in our ecosystem, their parents don't have any 401k, they don't own a home, and they don't have life insurance. So the rich get richer, unfortunately, in life sometimes. The rich get richer, and sometimes you can get rich by accident. Literally, you could just get rich by accident. But if you're not fortunate enough to get rich by accident, you got to get rich on purpose.
Big facts.
Don't let that go over your head.
Can I add something to this? Because I had a conversation last night with one of the wealthiest people that I've been around, and the conversation about AI came up, and our interview came up with Sinead about life expectancy. And one of the things we were talking about was the idea of people living longer, but also the reason why they want to live longer, right? They want to accumulate more wealth.
For sure.
So if the wealthiest people are living longer to accumulate more wealth, well, what happens to the people who are trying, right? Because they're staying and occupying those spaces. And I was like, damn, right? Like that means that there are always going to be a permanent employee class, like that it grows because
by design,
right? It's not being passed down to your kids anymore. This is saying like, oh, they're gonna botch this. The way we're gonna look at generational wealth is going to be completely different. And then I was like, well, if they live longer, who can do it? And so we started the conversation of Eli Lilly. I know some people are putting it in the chat and what GLPs are doing in terms of weight loss, and obviously that the health, benefits of people not becoming at risk. What AI is going to do for disease, diabetes, sickle cell, cancer, things of those natures. And it dawned on me that this is, yes, it's a health issue, but who can afford it? Because the next thing we talked about were peptides, which is like the new wave. I'm like, this is really expensive. Like this is like they're saying like it works faster for weight loss and it attacks fat differently, but it's very expensive. And so the people who are doing that and the people who are trying to preserve and live longer, that comes at a cost. And so for the person who can't afford to pay their rent, or the person who has student loan debt, or the person who has credit card debt, can they afford to be in that category of people who are saying, hey, we're going to try to live longer? Whereas the people who have capital will decide, yes, we're living longer and we can afford to live longer.
Well, everybody can afford to live longer.
Well, if healthcare doesn't become affordable, then they won't.
Well, the original healthcare is the best medicine.
Okay.
It comes from the earth.
This is true.
Me personally, I just started the soursop. I started my soursop cleanse.
Where did you get it from?